Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq. And Phil, markets open lower by over 1% with the skew favoring new economy stocks, even with yields moving lower. So Phil, with yields down and stocks are down, does that suggest there may be concerns with the growth story here?
Yeah, there's a few things going on that are making people definitely double check on how strong the recovery is going to be. One of them's COVID. The other is just looking at the manufacturing data. And the third is obviously looking at employment as well. The data's good, but it's not great, and it's stopped growing as quickly as it had been.
And Phil, with the Delta COVID variant spreading, could the progress with reopening be set back?
Yeah, so that's one of the big things that started to get people to focus the last few days. So Friday, we started to see the sell-off. And if you look around the world, we're actually seeing an uptick in COVID cases again, but it's not the emerging markets alone. There's an uptick in cases in the US as well. Especially in unvaccinated people. There's a few cases in the south of America where there's a lot of hospitalizations happening as well. So there's a lot more COVID cases going around in Indonesia. There's a huge spike in a lot of countries in Asia. They've actually started to introduce quarantines again. So all the things we had been talking about here in the last sort of 12 to 15 months, it's still happening. It's just happening in other countries and other parts of the world at the moment. But that has the potential to slow down economic recoveries, obviously, especially in Asia where people are going back into quarantines.
And turning to inflation and spending, Phil, I guess the key question is, are we past peak growth? Is it due to less demand or inflation and supply shortages?
Yeah, good question. I don't think anyone really knows right now, but that's one of the other things weighing on the US economy. You can see if you look at the retail sales data, the impact of the stimulus checks, the first rebound in the V shape, the second big uptick just after the election, so the January, February stimmies that came out. What we've seen since then is retail spending's been elevated, but it hasn't kept growing. So people have a couple of $1 trillion worth of savings because of COVID, because when you're working at home, you couldn't go out to restaurants, you couldn't pay for vacations. There's a lot of excess spending that people are now working down. So that's keeping retail spending high, but it's not increasing, like you said. So is that because there's not enough holidays to take, there's not enough cars to rent, or is it because people are seeing the inflation, which is also coming through in the data, and sort of double checking on whether they want to do that spending right now, or hopefully in a few more months when things calm back down, all the people that we've been missing in the workforce come back to the workforce, and the supply side sort of improves as well to pull prices back in line.
And speaking of shortages, to your point, what's happening with the labor picture? Because Phil, I can tell you anecdotally where I live, restaurants are just overwhelmed. In fact, they're closing on slower days like Mondays and Tuesdays. They just don't have the staff.
Wow. I mean, if you look at the data, there's been a sort of flattening of the new unemployment claims, but it's still at an elevated level. It's close to 400,000. In the old days, 200,000 was normal for a weekly new claims number. But when you look at the benefits payments, now, overwhelmingly, most of the benefits payments are those like pandemic benefits. And so they're about to expire. And obviously, one of the big questions is, are people not going back to work because the benefits are so good? And we've seen now in the last couple of months, some of the states have said, we're going to end these things early because we want to get people back to work. And the new claims in those states have been lower. So there's a little bit of evidence that potentially this is one of the factors holding people back from going back to work. But obviously the spread of COVID, the fact that schools aren't open and camps aren't fully operational is making it really hard. If you look at the sort of 30-year age group, especially women that are often forced to stay at home to look after kids, they're not coming back into the workforce either. So there's a few things holding back the workforce, but potentially the stimmy checks are one of them.
All right, Phil, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.